Hi everyone! You do not have to be a jack of all trades to invest your hard-earned dollars to earn 57% annualized return. All you need is to pick one real estate strategy, learn and turn the learning into practice so you can get the results that you want. I'm going to share with you one of my investments where I earned 57% annualized return after holding the property for less than 20 years. That is, I earned 57% return for every single year that I own the property. I will share the reason why I picked this market and how I was able to acquire many of this property even they are 1,000 miles away from me. If you are new here, this channel is about investing in cash flow, rental properties, achieve your financial independence, and make a big impact. My name is Korianne, and I achieved my financial independence when I was 35 through cash flow rental properties. After consistently investing in cash flow rental property over 8 years. If you have not subscribed yet to this channel, make sure to subscribe so you will not miss my future content. Thank you so much for doing it. Why do I invest in this market? The reason number one is new companies moving into this area. In the old days of 2006, I subscribed to many of real estate investing magazines as a way for me to stay current with real estate markets in the US. I read a magazine in my office about a few high-tech companies in California are moving to Austin. That is a signal there will be population increase in this area. That also means there will be housing demand to accommodate new professionals moving in the city and its surrounding suburbs. I did my research about Austin and start making a few phone calls with a real estate agents and local property management companies in Austin. I got 2 real estate agents that I like and requested them to send me current listing in the market. I requested one agent to send me listing on the north and the south area, and one agent sent me listing on the west and the east side of the city. The reason for that was so that I could learn about the price range in each area and knowing the school rating for them. Then about 2 months later, I flew to Austin and checked out some of the areas and also confirmed the data that I found from the listings that I got from these 2 real estate agents. Just a couple of months later, I make a few offers on a bank-owned foreclosures. Even in the peak real estate market in 2006, there were still bank-owned properties. These few properties was only 2 years old built, and it was in a good rentable conditions. So I was able to get a mortgage for each of them. Some of the distressed properties, bank will not lend you money because of it's not in a livable conditions. Then you would have to find an alternate financing for those property, which could mean at a higher interest rate like money lenders or private money lenders. And the reason number 2 is affordable housing costs. The home price was affordable due to the median household income. I also like it because there was a few Fortune 500 companies in the area already. My target tenants are above the median income earner in the area. Dell's headquarters is located nearby, and there are other corporate employers like IBM, HEB, and AMD. I bought this property in 2008. I purchased it at $147,000 and the rental income was about $1,200. I put down 20% and the closing cost with a total initial capital investment is $33,400. I also paid $3,000 for the make ready before renting it out. The property was only 2 years old home. After pay all the expenses, the monthly cash flow was $250 per month. So the cash on cash return on my initial capital investment was 8.9% per year. I recently checked. The property value is $430,000 and the rental income is about at $19.95. The current mortgage outstanding balance is $73,000 and the current monthly cash flow is $925. Let's do the math and see how much equity I have gained in the last 16 years holding on to this property. $430,000 subtract my loan balance, I have left $357,000. In the last 16 years, I also have 2 sets of tenants. The first one stayed there for 5 years, and the second family has been living there for 11 years. I have not had any late payment from this property. Even at the rental rate at $19.95 per month, this property is still at below market rent. I do not want to raise the rent given the tenants has been paying on time for the last 11 years. And I like to keep these tenants. However, I had some capital expenditures during the last 16 years to replace the new AC units, appliances, and the roof. So the total cost is about $25,000. Another thing to keep in mind when you calculate expenses for your rental, make sure to put away 5% reserve per month away for future big expense items like replacing the AC, the roof, appliances. It's a great habit to plan for the unexpected things. So when there is a big expense coming up, you would have the fund for it. Also, to keep your tenants happy, fix this item in a timely manner when they arise. Let's do the math again and see how much equity I still have in this home and see what an annual return on investment for this one project. So $357,000 minus $25,000, total equity gain is about $332,000. Return on investment, you divide that my initial capital investment, the total percentage return is 912% over 16 years. Annualized return, my total initial capital investment is 57%. I have not factored in the yearly cash flow and the depreciation tax deduction that I have been received in the last 16 years. Even without factoring all that in, the annualized returns here is already 57% for every single year that I own the property. A few things that you can take away from these videos. Research and pick the right market. You should take your time to learn about each market well before you invest. Check on its macroeconomic factors that may play a key role affecting the housing prices. You can do all the research online to find all this data, from job and population growth to employment, demographics, school rating, median income, median house prices, types of company that here. Understand your numbers well before making an investment. Number 2 is you cannot tame the market. Even Warren Buffett always say that. I bought this property as the real estate market peak at the time. My plan to keep this property a long time, so I will not sell even when the market turns south. Well, just a couple years later, after investing into this property, the housing market crashed in 2008 and the property value dropped 30% below my purchase price. I did not panic or feel the urge to sell because I purchased this property at the right price and the rental income cover for all the expenses. So I continue to pay for the mortgage payment and receive the monthly cash flow every month. I was able to ride the wave, and this property has almost tripled its property value after 16 years. If I did panic sell in 2008, I would not see my 57% annualized return. As for appreciation, the Austin market jumped at whooping rate at 42.2% this last year. A few new and additional big tech company headquarters have been moving to Austin in the last 5 years, like Tesla, Oracle, and others. So Austin home price have increased at a rate much higher than any other city in the US. It's great to be an investor in the Austin market and see the growth in the last 16 years. The home price increased so much due to low supply and high demand for housing units in Austin market. Not sure how long this increase rate will last, but in the meantime, I enjoy the fruits of my invested time in doing the research before decided to invest in Austin 16 years ago. Also, I believe at some point this market would level out when the supply grows to meet or surpass on the ongoing demands. The sooner you invest every of your dollars, the sooner you can create a great financial future for yourself. Only invest on investment that you understand. There are still many other cities and states with affordable housing. You can find one and start to invest. Think long term and take care of your tenants well. In the long run, housing costs continue to go up at a pace of 3 to 5% on the average, and do not panic sales. When you can borrow money cheaply, you can gain multiple ways on your investments. I continue to invest in cash flow assets when all the numbers pencil out. I do like to keep cash when I know I do not like to keep cash when I know it's lost value over time, especially during the high rates of inflation that we are experiencing in 2021 and maybe in 2022, with more money printed to stimulate the economy. Let me know in the comments if you have already invested in real estate markets. What are your favorite real estate markets? And maybe your ways of dealing with inflation rate. Let's all learn, invest, and make an impact. Ciao!